We did speak to a host of important voices earlier today on what they've made of the bull run nearly a week ahead of the elections. A lot of them have exhibited caution, saying that it's perhaps too late to enter the party right now. Hear them out.
I think the broader market has to do a bit of a catch-up. We've had a very sort of concentrated move on some of the major heavyweight components of the Nifty, and that has really propelled the market. A lot of participants, especially the retail HNI people, have been looking and waiting and watching because this market, as I said, has not been very, very broad-based. And I think that we may get into a phase where we'll have a catch-up. So I feel that the index per se may not give you that kind of vertical move, what we've seen in the last month and a half. But what we will see is a bit of a catch-ups in the broader space of the market.
I'm not sure that the market would go in with such a full head of steam as it has experienced for the last month into the election period. It's time to be a bit more cautious. Now the market's had almost an 8% rally from the lows. So it's a fairly sharp rally that has taken place. So I would be cautious. But I think long-term the fundamentals remain, what we want. We want to buy great businesses at good valuations. And in the January, February lows, we were getting a lot of those businesses at great valuation. So they're reflecting more, optimism now.
What I'm not so convinced about is the merits of buying the Nifty. Whether I look at the last 5 years, the last 10 years, buying the Nifty has not been a particularly clever idea in India. You're not even getting returns commensurate to your cost of capital if you buy the Nifty. And the collection of companies in the Nifty have pretty weak performance even at the moment. In terms of fundamental performance, the Nifty is a collection of companies whose total overall earnings growth remains sclerotic.
All right, it's not just the equity markets which are buoyant, but also the commodities, that too making record highs, and crude is currently a 5-month high level. Now, we spoke to Mriganka Jaipuria of S&P Global Platts and listen into what he has to say about the oil production cuts and therefore the impact on crude prices.
Supplies are tightening. Saudi Arabia has been producing well below the 10.3 million barrel per day ceiling that they have set for themselves in March and April. In April, production is expected to come in below 10 million barrels per day. Venezuela, of course, remains in crisis. Then you have uncertainties around Iran. Most analysts in the industry feel that the U.S. will not completely ban, and there will be some extension to sanction waivers, but they will still require a 20% reduction in Iranian supplies. According to our forecast, we're expecting inventories to draw by about 300,000 barrels per day this year. So yes, there is a tightening.
Okay, that's the word coming in on crude and the big move it's seen, 35% higher on crude in the year 2019 and 4th straight day running that crude has been moving higher. So that's the big theme across the globe. But back to our own markets, the mid-cap's actually under pressure now, and the top mid-cap loser this afternoon is Amara Raja Batteries. I'll tell you why. The shareholder agreement that Johnson Control and Amara Raja had for 22 years has now been terminated. The technical assistance agreement that they agreed on in 1997 has come to an end. Now, Amara Raja Batteries says that they now have absorbed all the critical technology, so it won't have an impact on the business. But there are two reasons why the stock is under pressure. One, Johnson Control has a 26% stake in Amara Raja Batteries. So what happens to that stake? Will they sell it to Brookfield? Remember, in November of 2018, Johnson Control had come out with a release where they said that they are selling their entire power systems business for $13 billion to Brookfield. So what happens to this 26% stake that they own in Amara? Will they sell it to Brookfield, which will eventually come into the market? So that supply overhang is one thing. The second is, although Amara says that they are well equipped for this technical transition, they will eventually have to get another technical partner on board. And will that transition be smooth? Will it be for a collaboration on conventional batteries or on electric vehicle batteries? No one knows. So until that takes place, there's an overhang on the stock. So these are the two key reasons why the stock is under pressure.
All right. So those two important bits of uncertainties that is really weighing on that stock. Thanks, Sonia, for that update as well. And as we slip into a short breather on Business Lunch, IMF Chief Christine Lagarde has warned that the majority of countries around the world can really expect slower growth in the year 2019. Listen in and we will be back soon.
The growth is losing momentum. and it is losing the momentum that we had hoped for pretty much across the globe. We have 70% of the global economy that is slowing down. So compared with previous forecast, it's clearly going to be a little bit downgraded. I think added to that, there are signs of hope coming up. So we forecast that 2019, second half, early 2020 should be better placed. Unless trade tensions go away, and go away for good and across the board, which would then clearly boost, would clearly encourage investment. We are very concerned about this very delicate moment where policies are needed on all fronts.